The reality is this: if you hold a lot of cash, money market funds, deposits, or bonds of any description, they're not going to buy you what they can buy you today, a decade from now. So I think there's a general tendency for people to move away from that asset class towards other things. And that's why the stock market's doing so well. It's why Bitcoin's done so well. It's why gold and silver are doing so well. It's even why the property market, ignoring commercial real estate, is doing so well. People are trying to move into other things to protect themselves against the devaluation of the currency. And I think that with the level of debt, of the government debt rising faster and faster, I think that trend will continue. And I think the gold price is signaling there's a general malaise about the about the ability to get repaid in something worthwhile down the line. So people are moving into it's not people moving into gold. I think it's the foreign central banks, but to a little extent, people are starting to put gold into the portfolios. I mean, when I retired 3 years ago, the official asset allocation of most banks for gold was zero. I've seen a number of very large institutions come out and say gold has moved from an unwatched asset class to what they call their most preferred asset class. So I think that's driving the gold price upwards as more and more institutions start to put it into their asset allocation. I mean, look at it like this. If you own an ounce of gold, 10 years from now, 100 years from now, it will still be an ounce of gold, and it will still buy what an ounce of gold buys today. You own a treasury bond. Do you know what that will buy in 10 years? Well, we don't know, but I know it's going to buy less, and probably with the speed things are going, probably a lot less. And I think that's the general feeling. And of course, central banks around the world are reducing their whole exposure to the US dollar. It's currently